Ever wondered how to make the most out of your credit card? Well, you're in the right place. Welcome to our comprehensive guide to understanding and unlocking the secrets of credit cards. Now, if you're wondering what a credit card is, it's a payment card issued by banks that allows you to borrow funds, typically at point of sale. They've become an integral part of our financial landscape, providing convenience, building credit and offering rewards. But it's not all roses. Misuse can lead to debt, credit score damage, and financial distress. That's why we're here to help you navigate the world of credit cards. In this guide, we'll explore the different types of credit cards, how to use them responsibly, and the impact they can have on your credit scores. Now that we know what credit cards are, let's dive into the different types out there. Did you know there are several types of credit cards available in the market? Each one is designed with specific features and benefits to suit different financial needs. Let's delve into the world of credit cards and explore some of the most common types. First up, we have rewards cards. As the name suggests, these cards reward you for your spending. The more you purchase, the more rewards you earn. These rewards can come in various forms such as cashback, points, or airline miles. They are great for those who pay their balance in full each month, as the rewards can offset the high interest rates that typically accompany these cards. However, if you're prone to carrying a balance, the interest can quickly outweigh the rewards. Next, let's talk about balance transfer cards. These cards allow you to transfer high-interest debt from one card to another, usually with a lower interest rate. They can be a lifesaver for those struggling to pay off their credit card debt, but remember, the low interest rate is usually introductory and may skyrocket after a certain period. Then, we have secured credit cards. These cards require a security deposit that serves as your credit limit. They are designed for those with poor credit or no credit history who are trying to build or rebuild their credit score. While they require an upfront deposit, they can be a stepping stone to getting approved for an unsecured card in the future. Finally, we have student credit cards. These are designed specifically for students and often come with low credit limits and reasonable interest rates. They can help young adults build their credit history while they're still in school. But remember, no matter the type, all credit cards come with responsibilities. Late payments, maxing out your card, or only paying the minimum balance can lead to hefty fees and a lower credit score. Choosing the right type of card is crucial, but using it responsibly is even more important. Tune into our next segment where we'll discuss tips on how to use your credit card wisely. So you've got your credit card, but do you know how to use it responsibly? Now, that's the million-dollar question, isn't it? A credit card is a powerful tool, but like any tool, it needs to be handled with care. First and foremost, make it a habit to pay off your balance in full each month. This is the golden rule of credit card usage. By doing so, you avoid falling into the trap of accruing interest, which can quickly turn a manageable debt into a financial nightmare. Now, we understand that life happens, and sometimes paying off the entire balance just isn't feasible. In these cases, aim to pay more than the minimum amount due to help mitigate the impact of interest. Next, let's talk about credit utilization. This term refers to the percentage of your credit limit that you're using. For instance, if you have a credit limit of £2,000 and you've spent £500, your credit utilization is 25%. While there's no hard and fast rule, experts generally recommend keeping your credit utilization below 30%. This shows lenders that you're in control of your spending and aren't reliant on your credit card for everyday expenses. And speaking of everyday expenses, let's touch on the topic of unnecessary purchases. It can be tempting to whip out your credit card for that shiny new gadget or that must-have pair of shoes. But remember, your credit card is not free money. Every pound you spend needs to be paid back, with interest if you don't clear your balance each month. So before you make a purchase, ask yourself, do I really need this? And can I afford to pay this off when my statement comes in? Using a credit card responsibly isn't just about avoiding debt, it's also about building a good credit history, which can open the door to better interest rates and more favourable terms on loans and mortgages in the future. Using a credit card responsibly can help you build a good credit score, but what is a credit score anyway? Credit scores can seem like a mystery, but they're actually quite straightforward. So what exactly is a credit score? It's a 3-digit number that represents your credit worthiness. Think of it as a report card for your financial responsibility. Credit scores are calculated using a formula that takes into account several aspects of your financial history. The most common model used is the FICO score, which stands for Fair Isaac Corporation, the company that created it. Your FICO score is based on 5 factors: payment history, level of debt, length of credit history, new credit, and types of credit used. The largest chunk of your score, 35%, is based on your payment history. This includes whether you've paid your bills on time, late, or not at all. The next 30% is determined by your level of debt, including how much you owe and how much of your available credit you're using. 15% of your score is based on how long you've had credit. The last 20% is split evenly between new credit and the types of credit you use. Why is your credit score important? It's a key factor that lenders use when deciding whether to extend credit to you and at what interest rate. A high credit score can lead to lower interest rates on loans and credit cards, which can save you a significant amount of money over time. So, how does using a credit card responsibly improve your credit score? It's simple. By paying your credit card bill on time and in full each month, you demonstrate that you can manage debt responsibly. This positive behavior is reflected in your credit score. Additionally, keeping your credit utilization low, or the amount of your available credit that you're using, can also benefit your score. Remember, a credit score is not a measure of your personal worth, but rather a tool that lenders use to assess risk. A good credit score can open up a world of opportunities, but it's not the only factor lenders consider. So, now you know everything there is to know about credit cards. We've delved into the diverse universe of credit cards, highlighting the different types available to you. We've explored the world of rewards cards, balance transfer cards, secured and student cards, just to mention a few. But knowledge of card types is just the tip of the iceberg. We've also journeyed together through the essential guidelines for responsible credit card usage. Remember, punctuality in payments and maintaining a low credit utilization ratio can help you avoid debt and keep your finances healthy. The significance of a good credit score is something we've stressed throughout. It's your financial fingerprint, influencing everything from loan approvals to the interest rates you receive. This is just the beginning of your credit card journey. The power of plastic money is now in your hands. Thank you for watching. If you found this information useful, please like, comment, and subscribe for more helpful videos.